Well, hello, YouTube. We had a fantastic week last week, and we were buying some strange currencies like the pound South African rand, the dollar South African rand, and we traded a little bit on gold and euro and New Zealand dollar, and a little bit on Nasdaq too. We had a fantastic week and achieved around about an 82% win rate. I'll show you the figures shortly. And so 42 trades, I think it was. Let's put that up on the screen. 42 trades and around about 80 to 82% win rate, which was fantastic. If you want to get a hold of the signals from my signal service, you can click on the link on the right-hand side of the screen and join up, and you can get it for free for 10 days or free for 30 days. And also like and subscribe and click the notification bell on this channel so that you get all the videos that I put out as they come out on time, and you'll be the first to know about them. Let's have a look at the markets, and I want to concentrate on two instruments today ahead of the week that's coming up, and that's the euro against the US dollar and then gold. And I think there are going to be some good opportunities in both of these. We'll be trading other currencies, of course, like the pound, the Australian dollar, Nasdaq, and a couple of others. And members will get access to those signals inside of our service, which, as I said, you can sign up for free. Just click on the link on the right-hand side of the page. But let's just look at the euro and gold for the purposes of this video today. So before I talk about euro and gold, let's have a look at the most important indicator of all of these, and that's the US dollar index, the DXY. And if you have seen some of my tweets and previous videos, you'll have noticed that I expected the dollar index to rally up as it did from this 105 support level, and this is where the 200-day moving average is, and previous support formed by previous resistance there and support here. And it's also a Fibonacci level, the 38% retracement of this entire move up from 88.6 up to 115 odd. And you can see that 38% retracement coincides perfectly with this area of supply and demand, resistance and support, and the 200-period moving average and those previous peaks and troughs. So it's a really important level. And I expect that the dollar will once it's retested it, which it's busy trying to do right now, we should get some sort of recovery from here. Now, one might expect that as markets begin to move one way or the other, that they continue in that direction for a longer time than actually it really does in real life. And often what we'll have is a reaction from levels, a consolidation for quite a long period of time before the market decides which way it's going to move. Now, this level at 105 is such a key support level, with the 200-period moving average on the daily chart and all the other stuff that I said before, the 38% fib, previous support and resistance, and being in an oversold condition. It's a really important level. I don't think it's going to be easy to break. I think we're going to have to see some more bouncing off this level, potentially a double bottom, which we possibly are trying to carve out right now, and then a move back up to 108, 108.50, and perhaps even higher up to this level here, which is at about 109, this previous resistance area, and a general area between 109, 109.50, maybe 110, but lots and lots of action taking place in that zone. And of course, all of these other moving averages starting to curl down into that area. And here we've got the 100-day moving average, we've got the 20-day and the 50-day moving average, all curling down to sort of coincide in that 109 to 110 level. So we'll have to see what's going to happen. What the dollar index does this week will affect all of the markets. It's going to affect the euro, the pound, the Australian dollar, all of the currencies, the majors against the US dollar. It's going to affect the Nasdaq and the S&P, and it's going to affect the gold price as well. So we have to bear in mind that what happens here on the dollar index is actually the most important indicator of all. And let's have a look at what's happening really on this chart. You can see we've got this doji. It's not really a long-legged doji. It's more of a short-legged doji. And that means hesitation. And the previous day, being a short day, of course, because of the Thanksgiving weekend, was also just a tiny little day. And we've got a little bit of a gap there. And if we have a look at this on the shorter term charts, we'll be able to see in some more detail. So let's go ahead and have a look at perhaps the 4-hour and the 1-hour chart on the same thing, the dollar index. And once we've done with the dollar index, we'll move on to euro and gold. But we need to understand what's happening here first. So I'm going to switch this up to a 4-hour chart, and let's have a look in a little more detail. You can see there was that low formed some time back, middle of the month, around about the 15th. And we've moved up. This was this bounce, which didn't actually get as far as I expected, this red line at, well, 108. We got a little bit shy of that and then moved back down to this area. And you can see on the 4-hour chart, well, there's not an awful lot to say about it, apart from the fact that we're sort of consolidating above there. And if we have a look at the hourly chart, it doesn't give us much of a clue either. We've seen a bit of a move up there. If we just zoom in, there was that low against the support at 105. And then this last week, we've just come down there, haven't quite reached that spike. Remember, that was a spike. So what we've actually done is we've reached the low of the bodies of these candles. That's quite important. So this area here, if you chop off the spike, so to speak, is actually the real support area. This spike is kind of a false break beneath the actual support where the real action took place. And if we go across to where we are at the moment, you can see it's precisely at the lows of those candle bodies where we formed that low on the 15th. So we are holding above the wick of that spike low, but not particularly convincing. We need to see what's going to happen. So that's the dollar index. So whatever happens here at 105 will probably dictate what's going to happen with the other currencies, the euro, the pound, Australian dollar, all of those sorts of things, Japanese yen. And we also need to look at how this is going to affect NASDAQ and gold, which we'll have a look at now. Not NASDAQ and gold, but the euro and the pound. So I'm just going to turn that back into a day chart. Let's have a look at the euro. Well, we've talked about this as well, and we think that the euro is due for a correction, maybe slightly higher. Overall, I think the euro is probably going to retest some of these lows, or at least perhaps retest parity at some stage. We've had a very strong rally off these lows. We've got up to the 200-day moving average. Also, on euro, remember euro and dollar index are very similar in the way they behave because they're kind of closely related. We've got a double top potentially on the euro here at around about, well, just below 105. Sorry, not 105, 1.05. So what's going to happen here? I don't know. A lot will depend on the dollar index. Remember, there's a little bit of space for the dollar index to go slightly lower, back to retest that 105 level, which means there's a little bit of space for the euro to perhaps go a little higher. And we could get up as far as 1.0550 or even 1.06, although I expect that we'll try and form a top where we are at the moment against this 200-day moving average. Doesn't mean that we're not going to get a false close above it and then a move back down. And then the support levels below us on the euro are at around about parity. We start at 1.02, 1.01, and then at 1.4 zeros in a row. That's parity, and perhaps even a slight move down below that, down to about 0.99. So we've got a number of support levels beneath us. We've got good resistance where we are at the moment on the euro. We could go a little higher. Now, my strategy on the euro is I'm starting to look to sell into these levels that we are at currently with small positions, and I'm allowing for a rally up to 1.0550, maybe 1.06. My target's 1.02. That's down here. That's this area that we broke through. We formed, well, it's actually 1.0180. Remember, we formed that resistance level going back into September. We struggled to get any progress moving up there, but we did make higher highs and higher lows progressively until eventually we bust above that high at 1.008 and then 1.0180 or 1.02, more or less that area. Through that area of supply and demand, that big area of consolidation, we managed to bust up through there, and we're now above it, and we've got space to retrace back down into that area. We're a little bit overbought on the euro. There is room to move lower. I expect that we'll get down to that 1.03, 1.02, perhaps even 1.01 before looking to bounce around a little bit. Now, coming up this week, we've got some important things. Really, two most important things are Jerome Powell speaking on Wednesday. That's always a market mover. So we'll have to find out what he's got to say about inflation and interest rates. That's going to be really important. And then on Friday, of course, we've got the non-farm payrolls, which is the biggest market mover in the jobs news section. First Friday of every month. It's a big day. It's always a big day in the markets. I expect jobs will start to show some weakness, and that might, surprisingly, add some strength to the stock markets and to the US dollar, which actually generally work opposite to each other. So that'll be very interesting. So Wednesday, Jerome Powell speaking. Friday, non-farm payrolls, and that's going to affect a lot of this. So we might just be in a range for the rest of the week. So Euro, I think generally look to sell into rallies, kind of where we are now, maybe at 1.05, maybe 1.0550, 1.06 maximum, and then for a move down into 1.02, maybe 1.01, maybe even parity. Next thing I want to look at is gold. This one to me is the most interesting. And I'm going to actually mention silver along with this, although I'm not going to show the charts. I will put some chart analysis for silver up in the members area in my members community. And I'll probably also just put a quick comment on silver up in Twitter this week. But I don't have time to go into that now. But let's have a look at gold. Remember, this applies similarly to silver. So gold, we had this triple bottom over really October and November, early November, a triple bottom, very, very incredibly strong support. And then eventually, and really at one stage, I was long gold. At one stage, I thought I thought we were tickets. I thought once gold had tried to break through this double, which was then a double bottom, and gold had tried to sort of attempted to get into that area and break lower, there was incredible buying of gold taking place, and there were all sorts of stories about central banks buying gold, big investment funds and houses buying gold. Everyone became interested in gold, and we saw a huge rally. It became incredibly overbought, but we've retraced a little bit. We haven't retraced enough. That's what concerns me about gold. There are two concerns, one that we haven't retraced enough and one that we're not going to retrace enough. We don't want to FOMO into trades, as you will have seen from some of my Twitter posts. We don't want to FOMO into buying gold, but it is possible. I wouldn't say likely, but it is possible that we're not going to get lower than where we saw this little spike low last week at about $1,730. We might not get lower than that. Ideally, we'd get down to 1720, maybe 1700, and maybe even 1685, some of these levels down here. There's loads of support beneath us for gold. We're still a little overextended. I'm going to try some small gold positions at the current price at the market open tonight, actually. It's just a couple of hours time before the gold and stock markets and everything starts to open up. About 4 or 5 hours time from when I'm making this video. So I'm going to be looking to put some very small positions in here, but I'm going to have bigger orders down at 17. We might get a double bottom at 1730, but I'd like to get 1720 or 1700 thereabouts. I haven't decided on the exact numbers for my orders. I never put them at round numbers, so normally they're slightly below the round number or slightly above the round number. Remember that, it's a really important key. Numbers on the charts, the big round numbers, the market rarely stops at them and turns around precisely at those numbers. Normally a little bit above or a little bit below. Bear that in mind when you're placing your orders. Sometimes a little bit below gives you an even better opportunity to get in. So that's my strategy on gold. I think at the end of the day, we're going to see, not this coming day, but in time to come, probably fairly shortly, we're going to see gold rally back up to new highs, up to the 2030 level, $2,030. Right now we're at 1750. We might get into 1700, 1720 before resuming this uptrend. We've got a solid base here and loads of support above there, particularly at the 1685 to 1720 level. That's the zone. If you can get a nibble at gold into those levels, you'll be doing fantastically. If you're prepared to wait and maybe miss out, as I said, don't FOMO into this trade, but I'm going to try a little bit here, just a little bit, but I'm going to have big orders, 1720 down to 1700, maybe even 1685. That's a strategy for the week, and I look forward to seeing some of you in the community members in the community section. Go and have a look at that on the link on the right hand side, and remember to subscribe, like, and press the notification bell for these videos. Take care. Have a fantastic trading week. I'll speak to you soon.